Today, we are going to be looking at three very different companies with market caps ranging anywhere from $10 to $40 billion. We'll take a look at their business model, their recent earnings, and I'm going to give my opinion on each of these three companies. And the first company we are going to be taking a look at is Ubiquiti, ticker symbol UI. This company has a market cap of $40 billion, and over the course of the last year, the stock prices ran up by over 195%. And what exactly does this business do? Well, they sell wireless as well as wired network solutions for businesses as well as home applications. And obviously that's very broad, but when you start looking at their product lineup, you get a better idea of what the company actually does. They sell cloud gateways, network switches, Wi-Fi modems, routers, whatever it may be, camera security systems, door access systems. These are all applications that are utilized by businesses, but also have started branching out into homes. And the reason that Ubiquiti's stock price is up by almost 200% over the course of the last year is because their fundamentals have increased massively. As of Q4 of 2025, which was announced just a couple of months ago, they had revenue of $759.2 million. That is up almost 50% from a year ago when they posted $507.5 million of revenue. And this is a situation that while they have been able to grow their top line numbers, they've also seen a massive increase in the strength of their bottom line numbers. Gross profit margins have increased from 40.2% last year to 45.1% this year. And they have seen their EPS increase by over 150% year over year, from $1.72 of EPS last year to $4.41 of EPS this year. And in my opinion, all of this technology that Ubiquiti sells are things that are going to be even more important in the future. So I don't think this business is slowing down anytime soon. What becomes difficult is projecting earnings for this company because right now there's only one analyst covering this stock on Yahoo Finance for 2026 and 2027. They have 2026 EPS growing substantially from $10.96 in 2025 to $11.78 in 2026. However, in 2027, they're expecting the business to slow down and them to only grow their bottom line to $1.96 of EPS. And when you run into a situation like this where there isn't a lot of analyst coverage for a company, what is better than looking at the forward PE ratio is looking at the trailing PE ratio for this company. And what they are seeing right now is almost a 60 trailing PE ratio. It's sitting at a 57.64. If we look over the course of the last year, this is the highest valuation that we've seen. And back in June of 2024, the valuation was half that of today. It was trading at a trailing PE ratio of a 25.2. So right now, looking at trailing valuation, I feel like Ubiquiti is a little bit more of a stock to watch. I don't think it's a company to buy right now just because I personally don't like buying companies that have ran up significantly recently. I like buying companies that are on the reverse. Like if you go back to 2024 for this company, they were on a major dip. The stock was trading at $350 per share in 2022, and it dropped by around 70% over the next couple of years to the middle of 2024, where the stock was then trading at almost $100 per share. So that was a good time to buy into the company. Right now, I think that it's just trading at a little bit of a premium valuation. This next company we have up here, though, is very clearly on a dip, and that is Rivian Automotive, ticker symbol RIVN. Back in 2021, this company IPO'd for around $130 per share. However, today the stock is trading for around $13 per share and currently has a market cap of just over $16 billion. And of course, if you aren't familiar with Rivian, they are an electric vehicle company. I actually see quite a few of these trucks on the road and even some of their SUVs. If you want an electric truck, they are actually really the go-to company. If you think about Tesla and what they have done with the Cybertruck, that has a little bit of a niche niche market. But this Rivian truck looks very similar to what you would expect an electric truck to look like. And just the other day, Rivian announced their quarterly delivery and production numbers. This past quarter, they produced 10,720 vehicles and delivered 13,201 vehicles. Right now, they're projecting that for 2025, they will deliver somewhere between 41,500 vehicles and 43,500 vehicles. To put a little more context around these numbers, in the previous quarter, they produced 5,979 vehicles and delivered 10,661 vehicles. And their delivery guidance was anywhere between 40,000 and 46,000 vehicles for 2025. So they've narrowed this guidance a little bit and kind of kept up on their deliveries, which overall are positive things for this business. But what was more interesting about Q1 of 2025 is that Rivian received a $1 billion investment from Volkswagen. Volkswagen actually bought into the company at $19.42 per share. So that is well below the current stock price. And to see this investment, especially at a premium to the current share price, is very exciting for investors. When it comes to Rivian, they aren't really a direct comparison to a company like Tesla. Tesla has a number of other things going on within the business. Their valuation, because of these other things, tends to trade at a premium compared to the rest of the market. However, for Rivian, they are a lot more similar to other car companies. And what this creates is a cyclical effect for their business model. And at the end of the day, my prediction over the next couple of years is that we are going to see a lot of people getting new vehicles. And that should help a business like Rivian continue to grow their top as well as their bottom line numbers. Over the past year and a half, Rivian's top line numbers have gone basically flat, but I think what occurs over the next year and a half is we see interest rates fall and a lot of people look to purchase new vehicles, and Rivian should be a direct beneficiary of that trend. But what could be most exciting for Rivian over the next 1 to 2 years is if they are able to achieve profitability. We are seeing them kind of trend in that direction, and there's been a couple of quarters where they have been close, but they haven't yet gotten there, and that can often be a big boost for a company like Rivian. And right now, analysts don't expect this company to reach profitability in 2026. The average EPS estimate is negative $3.01, which is a little bit of an improvement year over year. But I think, again, the bigger thing for Rivian in 2026 is the potential upside in their top line. Right now, analysts are expecting their top line to grow by almost 33% year over year. And the final company that we are going to be talking about today certainly needs some help with their top line numbers, and that is BJ's Wholesale Club, ticker symbol BJ, and their market cap right now is sitting at $12.21 billion. Over the course of the last year, this stock is up only 6%. However, from its recent all-time highs, the stock is down by around 23%. And BJ's is basically just a knockoff of Costco. They have memberships and they offer kind of bulk products. They are primarily located on the East Coast. However, they're starting to branch off and they're looking actually in the next 1 to 2 years to expand into Texas. And like I said, this is a company that needs some help with their top line. Their net sales for this quarter came in at $5.2 billion. That was only growth of 3.2%. Their membership fee income did increase 9% year over year. However, this net sales growth is not comparable to what we have seen from Costco. For reference, in Costco's most recent quarter, they brought in $84.4 billion in net sales, and that number increased 8% year over year. So they're growing their net sales by over double that of BJ's. The one thing that BJ's does have over Costco is a lower valuation. Their forward P ratio is currently sitting at a 19.38, while Costco is trading around a 45 forward PE. However, in my opinion, you get what you pay for in this situation. Costco has a lot more brand loyalty and the business is growing at over twice the rate. So So that is why it's trading at a premium compared to a competitor like BJ's. The one thing that could change this situation and make BJ's more competitive with Costco is if they are able to grow the number of stores that they have. Right now, they're planning to open 25 to 30 new clubs over the next 2 years. And primarily, they're planning to locate these in Texas and grow into that market. So this could be a good growth vector for the company if they execute at a high level. In my opinion, both of these companies, BJ's and Costco, are just worth watching right now. I don't think either of them are a buy. BJ's needs to see a lot stronger growth numbers into the future, especially as they expand their store count. In terms of Costco, I want to see their valuation come down because right now a 45 forward P ratio is just too much of a premium for me to purchase. But honestly, out of all three of these companies that we've talked about today, the one that I find most interesting is Rivian. Rivian is one of those plays where it has a couple of different things that could go right for it in the next couple of years. Again, I think there could be a massive boom in the car market. And the other side of that is Rivian is poised to continue growing their top line and expanding their deliveries. They're even expanding their production line. And all of these different factors could lead to profitability as well as them increasing their business as a whole. And that could present a very good buying opportunity now before a lot of those things actually play out. But as always, I'd love to hear your thoughts down below. Let me know in the comment section, do you own any of these three companies? Are any of them on your watch list? And which one is your favorite? And while you're down in the comment section, make sure to drop a like on the video and subscribe for more videos like this one. And as always, have a wonderful rest of your day.